This is Brent with Trade Therapy, and this is another chart breakdown video for ARKK, our Clarity Spotlight last week. Today is Monday. It's March 24th. It's roughly about 11 o'clock Pacific time. This is where we left off with ARKK back in July of last year. In July is when we started talking about the three-wave cycle. We started talking about the expectations for this, what we could see was an extremely large institutional base that had been built within ARKK at the previous run's reaccumulation level. Those of you that have been reading trade therapy content for some time are aware that most of the time after something, especially a high beta asset distributes, which ARKK did up here, when it distributes and it comes back down and it marks down and goes into the next phase of the institutional business cycle where it decides to stop and accumulate again, typically lands right at the same level where the reaccumulation happened in the previous run, and that's the case with ARKK. And the result is you get a combination of the leftovers of this base that was right here that was not taken in this run here. So the leftovers of the long position there combined with the new long position that all of this short position just rotated into right here, which is this surge of volume right here when all of these short positions converted to long positions, and now we're left with this gigantic base. And so back in July of last year, we saw that this was late stage accumulation. We saw that it had made a jump across the creek type of a move here and had backed up. We have since been writing for the past few months about the multiple creek theory, Hank Prudent's work in that area, but the multiple creek concept for assets that have been under a really heavy accumulation and have really been suppressed by this high interest rate, high 10-year yield market that we have been subject to for the past couple of years. And the growth and risk category fits squarely in that. So we were talking about and expecting a potential additional jump across the creek move. We thought that ARK was setting up for it. And if we fast forward now to November, which is the last time we covered ARKK before last week, you see that we did get that jump across the creek move here. We did see it set up. It actually dropped. July was right about here. We see that coming out of that July spotlight, they even dipped it further, taking out the inefficiencies of this run right here, this jump across the creek. So dipped it way down into that and then jumped it across the creek again. And those of you that have been reading our content for the past few weeks, and especially this past week, we really paid particular attention to stressing the strategy behind the jump across the creek move and why Wall Street and why institutions make these big dramatic price moves late in accumulation cycles, and that they are using this to lure in retail traders that they then take out. And so they jump across the creek really quickly, create this inefficiency right here within the chart structure, and then come back and take people out of the trade. And they do so to build up their share position by taking out stop losses. They do so to increase the profit of their trade. They are long, they are in late stage accumulation. They know that they're about to move prices up and out of this range. That is the next phase, the next stage in the business cycle. And so they're doing everything they possibly can to get as much of the asset that they're accumulating. In this case is Kathy and ARKK. And if we go over to a live chart, we can see that that backup move is exactly what we got. We did see it jump across the creek and continue to extend up into this section right here, taking out the redistribution price congestion from the previous run. We do see that we've got some pretty strong now positive or bullish divergence has developed within ARKK. We do see a strong bounce off of this creek right here, which would be, I would say, probably a secondary creek to Let's move right in here. But anyway, we see it bouncing at a logical place. We see support where we should be seeing support. We do see volume coming in. All of these things point to the next stage in the institutional business cycle. This jump across the creek and back up to the edge of the creek is really kind of a landmark that we should all be looking out for when we're deciding to get involved in these late stage accumulation or reaccumulation structures in the market. When we do see some action like this, where we see a violent price move up and then a violent move back the opposite direction, we look for inefficiencies within the structure. We look for positive divergence to develop, which we have seen develop. And then we start looking at the next phase of the institutional cycle, which from here would be turning into markup and extending up into all-time highs and possibly building out a reaccumulation structure once it gets up into this all-time high region. So that's what we'll be looking out for. I hope everybody got a lot out of this last week's Clarity Spotlight on ARKK. I hope everybody had a good weekend and hope everybody has a good day trading.